Okay, hello everybody. My name is Guy Rasmussen. I'm an independent financial advisor from Whole Wealth, and I'll be talking about the impact of the Banking Royal Commission on the real estate industry. I've also got here with me Rod, who will no?
Yeah.
Okay. Rod will go over. I'll be covering a whole range of a broader. I guess I'll be taking a broader stroke to the impact of the Banking Royal Commission on the real estate industry. Rod will talk about specifically how it impacts property buyers. And yeah, we'll get started. So what does everyone know about the Banking Royal Commission into financial services, banking and superannuation?
More commission for you guys.
More compliance.
More compliance, that's right. So did anyone know what the recommendations were and a lot of the...
They need to pay. They could pay for those recommendations now.
Yeah, that's right. So probably one of the biggest winners was Hayne and his bill he got to charge the government. But yeah, so what happened was there was a lot of dodgy stuff done by the banks, and so a Royal Commission was called, and it was started in, I think, it was about March last year and continued on this year. It covered everything from banking, mortgages, loans, lending, to financial services, all the way to superannuation. So basically what's happened is, to everyone's surprise, one of the biggest impacts was actually on mortgage brokers and the way they get remunerated. And so what we're going to talk about is the impact on that specifically, and some other impacts that might impact the real estate industry. So yeah, that's me. Okay. And this is pretty much what started the Royal Commission. Just every other week there was something wrong with financial services or financial products like the banks, insurance companies.
So Guy, just quickly looking at this, this is all about dodgy advice, people being charged, gouging of fees. So I was aware of specifically what affected the mortgage broking, like the home lending industry, which was two things: removal of upfront commission being paid by the lenders to the broker because of perceived conflict of interest, as well as removal of trail. And trail was like now, they wanted it to be removed straight away because there was discussion around brokers placing customers into loans that weren't ideal for them, but more ideal for the broker. Yet, when you look at this, which is all the news that was reported, nothing is talking about brokers who have put customers into the wrong loan type. So So what are the things that came out that affected this in financial services and so on and so forth?
So basically what they're planning to do with the removal of commissions, they also want to do with the advisors. So they want to remove commissions on insurance products, whatever. A lot of commissions are grandfathered, so which means that from a certain point on, there's no more commissions. But they want to just do away with that, no commissions. I'm not opposed to that. The advisors have had a long time to sort of restructure the way they get paid, and you can make an argument that you can get paid upfront for financial advice. It's a much more difficult prospect for mortgage brokers because people aren't going to want to pay all of it upfront. And I think what they've done is, I don't know if it's done intentionally. The skeptic in me seems to be like a lot of these changes will benefit the banks, but there's always unintended consequences. For instance, when compliance costs go up, what that means is there's a cost on small businesses, and that could create pressures where they're not very competitive, while mid-tier to large organisations have the structure and organisation and the sort of the procedures, the processes to be able to handle that sort of compliance. So you're creating barriers of entry for smaller groups and lower tier firms, while the bigger ones they're weeding out the competition. So a lot of the changes that are happening in the financial planning industry, where there's new education standards, there's removal. They haven't talked about it yet, but after the Royal Commission, there's talks of removing commissions, and there's emphasis. It's a whole bunch of other things, but removing of commissions for insurance products is what they suggested. And so you get with these new education standards, it's going to require financial advisors to get a degree. And so I've got a degree, so I'll be fine. But a lot of other advisors, especially the old ones who started as insurance brokers, are going to leave. And so again, it's going to, who can afford to pay for degrees and that sort of thing? The banks can do that. They can,
One of the key things for us, right, is that we actually don't advise.
Yeah.
So we'll provide options, but we don't make recommendations as such.
Yeah.
We're not allowed to.
Yeah.
So that's where it's
The model won't work then.
quite slightly different, because we don't give advice.
Yeah.
But that's what they're trying to impose.
They're implying that we give advice.
Yeah, that's
Yeah.
right. So
Yeah.
if the model
So-
does change with the fee for service
Yeah, so-
advice, then
Yeah.
that's not going to work.
And so, as Rod alluded to, this is going to create unintended consequences where there's probably going to be an exodus of mortgage brokers and stuff like this. Do you agree? Or?
Yeah, I mean, after the Royal Commission, or during that process towards the end,
Yeah.
they conducted a survey, and I think it was, the population was about 6,000, so there were 3,000 direct customers or bank customers and 3,000 broker customers. And so they asked them a number of things to try and establish what people's views were. And what they found, things like, since 1986, bank margins have dropped from 5% to below 2%, and they're attributing that to competition,
Yeah.
which is basically due to the broker
Yeah.
presence.
Yeah.
And broker share of new loans has gone from 10% to 60%.
Yeah.
So in a sense, they're taking that line and saying, well, if it's now 60%, it's because people are happy to deal with brokers as opposed to dealing direct with lenders.
Yeah.
One of the other things was that 96% of people interviewed would not be prepared to pay up front for a home loan. So in answering your question specifically, what would happen is the broker business would become unviable. So brokers would leave the market,
Yeah.
which then results in consumers having to go direct to banks, which specifically means banks that have branches,
Yeah.
which specifically means for those guys.
Yeah.
So what you can see happening is a reduction in competition,
That's right.
Yeah.
which would bring you back to 30 years ago,
That's right.
where bank margins were high. So this is a likely scenario of what could unfold if the recommendations were accepted ad nauseam.
Yeah, exactly. And also in this talk, we're going to talk about Liberal and Labor governments and those kind of impacts on the real estate industry, property market. And we'll also look at some economic factors that could impact property. So, as Rod said, the unintended consequences is there's going to be less competition with a loss of exodus of mortgage brokers. Also, with the removal, 96% of customers would not pay up front, so that's huge, and so, yeah, like you said, the banks are likely going to benefit where people aren't going to know what the best deals are, aren't going to be able to interpret what the best terms are and benefits they could get, or features with their loan, and so they'll just stick with who they are, and it's going to be basically banks. So there is, with the Banking and Royal Commission, it wasn't done on the real estate industry, but it was done on a lot of the lending industry, and it doesn't have a direct impact on the real estate industry, but it will have an impact on property and a lot of how loans get approved and the amount of supply of buyers that are in the market. So some of the direct things we saw were tighter restrictions on lending, leading to less loans being approved. So in the midst of last year, you could see the banks under pressure change their behaviour. It made it harder to approve investment loans. Is that right, Rob? Yeah. Investment loans, and one of the criticisms was, what was it, that a lot of the mortgage brokers gather their information, a lot of banks base their approvals on expenditure. So now they're getting tougher on approving expenditure.
With living expenses, the banks were accused or was made aware when they were using hemp, which is basically the minimum spend, like a figure, an index, which proves to be quite conservative. And so there's a lot more drilling into specific transaction listings and so forth of homeowners or potential borrowers to understand what their living expenses are, as well as how they calculated interest and repayments for additional loans. So the calculators have been wound up, so to speak, and in effect what it's done, it's reduced applicants' ability to borrow. So they're borrowing less, which then means more are not hitting the target in terms of what they want in terms of the property. Having said that though, since then, as the market's reduced, as the volume's reduced because of all of this, banks are now coming back into the market and saying our restrictions from APRA have been lifted, so now we're open for business again and we want investment loans again. So this is the very reason why often consumers would prefer to deal with brokers, because we're aware of what's happening in the industry, across the industry, as opposed to telling our story as a single lender, and as opposed to consumers who are really focused on their jobs, their lives, and what's important to them all the time, rather than what's important to them every now and again when they decide to buy a house.
So as Rod mentioned before, tighter restriction on lending, more compliance. So again, this is going to be work into the bank's favour, as their organisations can handle this type of compliance. It'll push out smaller players, removal of commissions, mortgage brokers. So we talked about upfront commissions and trail commissions being removed. Commission's got a dirty word, but I think it's a very effective way of remuneration for mortgage brokers. And like Rod said, 96% of people don't want to pay upfront. So I don't think the Royal Commission fought deeply. Maybe they did. Who knows? It's not going to be great for the consumer if, having to pay upfront, and not good for the mortgage brokers. Okay, exodus of mortgage brokers lending. So we talked about this, and so the clients are gonna find it hard to get more loans. They're gonna find it hard to get the best loans, best interest rates, best features, that sort of thing.
So in terms of the buy period, I know when you buy new homes, it's 14 days financial terms usually.
7, 14, 21.
So usually around that.
14.
So let's say 14 days. Because of this, let's say they don't want to pay upfront costs. Is that means they need to go multiple branches in
Correct.
order to find their deals? Or
Correct.
that stretch out the buying period?
Absolutely,
Yeah.
absolutely. Because if you think of it now, a customer will go to a lender, get the approval, not enough, go to another lender, because they've got to do the work themselves individually, separately, as opposed to going to a broker who can look at all the lenders and quickly work out which is most suitable for that client's situation.
So in a selling perspective of the real estate, would that be part of their service? Is that any assumption in that?
There's most real estate companies have mortgage brokers beside them, but I guess the people that I'm dealing with aren't comfortable that the agent selling the property is also associated with the person providing the
Yeah.
loan. So is that is a conflict of interest that they see and that they aren't comfortable with. So yeah.
I don't think real estate agents are going to be across a lot of the products and a lot of the features as a mortgage broker would, and it'd be because it's not their area of expertise. It'll be a very slippery slope if they really dangerous game they play if they. But again, it is a disadvantage to real estate agents because people are going to find it hard to get. The beauty of a mortgage broker is they can help link a buyer to an ideal lender. So different lenders have different criteria and different things that they want from the buyer.
So specifically, an example I've got right now. So I've got a customer who wants to go to auction Saturday. They're currently with Macquarie. And they don't want to move because of whatever their personal reasons are. Now, due to their application, I've realised that Macquarie actually don't do a full assessment. So they want to pre-approve it, right? Because until you get a valuation done, until you get a contract, you won't get a full approval from a lender. So they want to pre-approve it. I found out today that Macquarie don't do a full assessment on pre-approvals. They just do it based on the numbers that you provide. So that's not really not really an approval. So the issue I've got is this is a customer who the woman has had 1 month in the job. She's on 5 months probation to go. So we need an exception on that. Their servicing is very close, like just over the hurdle. So I'm nervous about that. And ordinarily, if I had a choice, I wouldn't go to Macquarie. I would go to someone who gives you a full assessment. Because when they go and buy the property on Saturday, they're comfortable that someone in credit has actually assessed their application.
And credit will still do full assessments even in this climate?
In many lenders, they say they will fully assess pre-approvals. Many lenders do. Macquarie doesn't.
But in this climate with
It's still no problem. Yeah. So many of them, like for instance ING, many of them, but ING, they say after we've given you the pre-approval, you've got 3 months to give us the loan contract, 1 pay slip to show you're still there, plus the bank balance to show that you can complete the purchase.
Yep.
You've got 3 months.
Yep.
So that's
still good.
that's really good for customers who are, not sure. Whereas Macquarie, they want to buy $1 million home, and no one in credit's picked up the application. So, not ideal.
Yeah.
So a broker knows that. Now,
Exactly. Yeah.
a
Real
person,
estate agent's not going to.
real estate doesn't care,
No.
because real
Because
estate agents,
Auction's going to go ahead anyway.
yeah, real
right?
estate agents, they want listings, so they
Yeah.
spend all their time chasing listings.
A different
Their focus is
customer.
different.
Customer.
Yeah. And so that's one of the impacts that'll happen. A smaller buying pool because mortgage brokers, and And mortgage brokers, like Rob was saying, they also coach the buyers onto what they need to do for loan approvals, and so that process can be stretched out now because less mortgage brokers, smaller buying pool. It's going to impact the real estate agents. So looking at economic and demographic factors, so one of the big ones is increase in interest rates around the world. The RBA is going to try to suppress interest rates, keep them as low as possible. There might even be a reduction, but with all the economies around the world increasing interest rates, that might put pressure on the RBA to follow suit. But as we know, as interest rates increase, the amount of availability of money for people for expenditure goes down, and it's kind of like a lever. As interest rates increase, prices go down, or if interest rates go down, prices go up. So look out for that. Slow wage growth. So this was a big problem in Sydney and Melbourne, as wages haven't increased to the amount that property prices increased. So that put pressure and stretched people's ability to pay off their loans. With the increase in interest rates, it should keep prices stagnant for a while. Increase in nationalist and anti-immigration sentiment. So one of the big drivers for growth in property prices is a growth in population. Australia has a low birth rate, so there has been an increase in sort of nationalist sentiments, and political policies have, as we go into the next slide, I'll talk about that in more detail. But yeah, so Australia needs immigration to push up growth, demand in property, and lower Australian dollar. So that might actually be a good thing that's happening economically. If Australian dollar goes low, then that means more foreign buyers. But
if immigration policy doesn't allow for it.
Yeah, so I'll go into the Libs. Is that the next one? Yep, Liberals. Okay. All right. So impact of the Liberal government on property. So the first one is a reduction in superannuation concession. So a lot of properties, self-managed super funds, rely on contributions into super to pay the repayments. So what's been happening slowly is a reduction in concessional and non-concessional contributions, and it's been getting smaller and smaller. And so what that has done is made it harder for people to purchase properties within the self-managed super fund and effectively pay it off. It hasn't completely done, but it makes it more difficult. Introduction of the 1.6 million transfer cap. So a lot of people had properties within pension phase, which was a 0% tax rate, and they've had to move that into superannuation, and there's been a bit of this could impact whether they decide to purchase more properties, and also there's also been tighter restrictions on lending within superannuation, so that's also impacted self-managed super fund and property purchases. What else is introducing measures that impact foreign buyers. So one of the measures that Morrison, as the Treasurer, did under Malcolm Turnbull was for new property developments. You might know this. There was a 50% cap on new builds for foreign ownership. Has that come into legislation yet?
Is that FIRB?
Yeah.
FIRB, not too sure.
Okay. And they've also introduced an annual surcharge on vacant apartments by foreign owners of up to $5,000. So they've also removed, I forgot to put up there, years before they also put they removed the CGT discount for foreign owners. That impacted expats. So the problem with Australians that are living overseas, taxes based on residency. So they say foreign buyers, but a lot of the time they're impacting Australians that are just doing a stint overseas. Okay, and they're also, I forgot to put up there as well, they're also removing the principal place of resident CGT exemption. So if you're an expat and you have a home that's in Australia, or you're a foreigner who owns a home, you're allowed one place of residence that if you sell it, you don't have to pay CGT. They're removing that for non-residents. So, I have a lot of clients that have told we're probably going to have to sell their property before this financial year.
There's no CGT.
Why has
Well, you still get the exemption.
Well,
Yeah,
so
so
we
we
can
get
put the
exemption.
market.
Yeah,
This year is the day to buy.
So they always the Liberal government's supposed to be the free market, the less tax, but they've introduced their own set of taxes that have impacted the. And I see what they were trying to do in the boom times, but now that interest rates have sort of risen and property prices, especially in Sydney and Melbourne, are going down, this will just exacerbate it because that'll de-incentivise foreign buyers that could have propped up the property market. So that's a problem.
Does the government want the price to go up or not?
They do.
Thank you.
So they want to, so they do, but there's always two sides of a transaction. So there's the buyers and sellers. So they want the sellers to make as much money as they can, so they like when prices go up. But also we have a lot of millennials who can't get into the market. And so what they thought is,
Buy a deep switch.
they thought they'd attack the foreigners, the foreign investment, but the foreign investment drives up, so it impacts the selling side. So it's a, you can't win. It's a silly game to try to. And now that they've introduced this will further put pressures on house prices and won't be good for any sellers. So things that they're trying to do is releasing more land for property development. So this is mainly in Sydney, I think maybe Melbourne, but they're trying to release more government land so it can increase the supply. This might create more listings for real estate agents, but also it might flood too much supply with property prices down. So it's a bit of a give and take. Introducing first home savers scheme. So that's a scheme where first home buyers can put money into super and then withdraw it. It's not as tax effective as the last first home savers account was, but it's better than nothing. So they can put up to 30 grand each, and then if you're in a couple, you can add up to 60, and then 15,000 per year. And then they're establishing a $1 billion national infrastructure facility, similar to the program in the UK.
$30,000 is not enough.
No, it isn't. So I guess if you team up with your partner, it can add up to 60,000.
But you need
And then
20%, isn't it?
Yeah, and so you probably need
The median house pricing in Sydney is close to $1 million.
yeah.
So that's
Still better than what it was before though, 15,000 wasn't it before?
Yeah, that was the first home owners. That was like
yeah.
Right.
That's
Oh,
But
this is
the-
you need
but
to
the
save up.
previous scheme
So-
for saving, I think,
Yeah.
was higher than
Yeah.
that.
So if you couple it with state, first home owners grants and that sort of thing, it can be good. But most of the grants now are only for new properties.
New entrants.
Yeah.
New entrants and new properties.
Yeah. So most states, I think, give a free stamp duty at least, but that could be a problem. So the Liberal have impacted. They'll try to scaremonger about Labor, and we'll get into Labor, but they did have their share of taxing the real estate market. Okay. big thing that they're also going to do is they said they're committed to legislating all the recommendations of the Royal Commission on the final report. So all the things that we saw on like the mortgage brokers and that sort of thing.
They're going to actually allow,
yeah.
they're going to push for it to be actually legislated.
Yeah,
So there's no lobbying is going to have any impact.
I don't know. So there is, I think, is it 30,000 mortgage brokers in Australia?
Yeah.
Yeah. So that's a pretty big lobby, and their families and that sort of thing. So.
But they're going to ignore the lobbying, is what you're saying.
When the report first came out, they said they were gonna put in do all the recommendations. But we'll see after. There's quite a few good commercials that I think the mortgage brokers have come out talking about why it's important to have mortgage brokers. And some of the recommendations will have unintended consequences. So
one of the
that's a very hard stance.
one of the industry groups are now saying we don't think trail is dead. So there's still a lot of discussion going on.
Yeah.
And
what is dead?
so trail. So
trail is
you know how
dead.
there were two main recommendations. Everyone said, "Yep, trail will go end of next year, end of July, end of June next year." Now some of the industry groups are saying, "Well, hang on, we're not so sure," because there is a reason for trail, and it's not a stupid reason.
But is the government's listening?
This
This is part of the lobbying.
Well, the issue is now, news has moved on to having a Royal Commission in old people's homes. So we don't know what the government's doing in this, but this is the feedback from talking to the government, right? So
from what I understand, Liberal governments are thinking hard on whether to adopt some. Yeah, especially the commissions because it's the main remuneration, and people have told them about unintended consequences. Labor, when it first came out, they said they'd do everything, and we're probably looking at a likely Labor win. But I think with the lobbying, they might be able to change some of that or sort of stretch out the time.
That's scary.
Yeah. So.
That's really going to directly impact.
What's that?
I know most of the developer doesn't like Labor to win.
No, that's going to impact a lot if they do put. Right now we're hoping for lobbying. I mean, it's just a report, right?
Yeah.
Recommended report. I mean, they do recommendations all the time.
Correct.
They do,
and nothing happens.
And nothing happens. But if they're saying that they're going to actually put forward and legislate every single
Labor
recommendation.
said they were going to enact every
single without.
Now, before they saw it.
Yeah.
Now they're going, hang on.
They're backing.
Which is typical of not just them, all of them.
So that's what I was saying. There's 30,000 mortgage brokers, and that's voters, and plus their wives, and it's good.
The outcome may not be good for consumers.
Exactly.
That's what's the most important thing.
Exactly. And so removal of the remuneration structure that the mortgage brokers have. 96% of buyers say they don't want to pay up front. So that's going to
oversee.
Overseas, so Commissioner Hayne recommended the Netherlands model, because this is what happened in the Netherlands. And what they said was, as part of this process, you can borrow the fee and add it to the loan, right? And spread it out. What they've said, since the Netherlands made this change, the number of banks participating in the Netherlands home lending market is halved.
What?
Halved. The number of players have halved, and the largest bank, which is Deutsche Bank or whoever it is in the Netherlands, their net margins have increased, which is what happens when you have less competition.
Yes. So the big bank got bigger.
Big banks get bigger.
And they saw the results there.
So I don't think he saw the results.
He didn't see the results.
I don't believe so. No.
But even a layman
it's crazy.
would even work that out without even seeing results.
It's crazy. I mean, they didn't even ask. No one from the mortgage broking industry was questioned in the Royal Commission.
Yeah.
Not one.
No. And all the bad press has come and bullying has come from the Big Four. So we're just strengthening
Yeah.
the Big Four when they're the ones that have the
That was
power
the most
already.
weird.
It was the
That's
most
the
surprising.
weirdest thing.
Yeah,
It was
that was
the
surprising out of all
weirdest
the
thing.
recommendations was the where they came to the conclusion.
Yeah.
It's
So,
just bizarre.
yeah.
So bizarre.
So so that's basically the possible governments.
Oh, wow, that's, I did not know that.
Yeah, so that's something to think about when you're casting your vote. Yeah.
Not
I
working.
think that was. Does anyone have any questions or wanted to talk about?
Is it your last slide? No?
Yeah, I think it's
Oh, it is.
close to the last slide.
So if they ban commissions on insurance, no one's going to buy insurance.
Yeah, so that's the thing. With insurance, if they ban insurance commissions, a lot of specific insurance brokers are going to find it hard because people don't want to pay upfront for just insurance. Same sort of thing as mortgage. I guess what I've tried to do, because I don't accept commissions, is try to bundle it as a whole package. So you get insurance advice, you get
Why did they
super
only
investment.
target in this industry? If they want to take out commission, what they don't do to real estate agents? So buyers don't pay. Buyers don't pay. Buyers pay.
So that's what I was going to discuss. Is there seems to be a war on commission as a remuneration, and so who knows in the future? There isn't really talks of real estate agents, but in the future there could be an attack on commissions for real estate agents and that sort of thing. So okay, guys, if there's no more questions, we'll finish up.